Good morning, everyone. I am Marianne Buhan, and we are Group 1. We're going to discuss about gross income. The topics will be discussed by the following members: Marianne Buhan, Francis Bagao, Maria Cristina Babano, Jamaica Ata, and Les Abigail Bacto.
This topic is composed of the following contents. First, the definition. Second, gross compensation income. Third, gross income from business and profession. Fourth, gains from dealings in property. Fifth, passive income. Sixth, partners' distributive profits from professional partnerships net income. And lastly, other sources of income.
Gross income. Gross income are incomes derived from any source except for items specifically excluded by law. So, gross income means the pertinent items of income referred to in Section 32A of the Tax Code. It includes all income from whatever source unless exempt from tax by law, including but not limited to the following items. They are compensation for services, including fringe benefits and commissions, gross income derived from business, gains derived from dealings in property, interest, rents, royalties, dividends, alimony and separate maintenance payments, annuities, income from life insurance and contracts for endowment insurance, pensions, income from discharge of a debt, distributive share of partnership gross income, income received as by an estate or heir by reason of a person's death, and income from an interest in an estate or trust. Take note that the term gross income, whenever used without qualification, is comprehensive as defined above. It has different connotation from gross income in the determination of the minimum income tax of corporations or gross income tax of corporations. Gross income includes gross profit from ordinary business and other income not subjected to passive income tax or final withholding tax. Damages received in libel and slander suits are not taxable because they do not satisfy the definition of income for income tax. For income tax purposes, because these are presenting merely returns of capital. So accordingly, the definition of gross income includes a catch-all clause that is from whatever source to supplement the enumeration by including any non-enumerative items which can properly be defined as income.
Gross compensation income. Gross compensation income means any remuneration for rendering personal services. Generally, compensation income is obtained from an employer-employee relationship between payer and recipients. The basis upon which the remuneration is paid is immaterial in determining whether the remuneration constitutes compensation. Thus, it may be paid on the basis of piecework or a percentage of profits and may be paid hourly, daily, weekly, monthly, or annually. There is no determination of compensation until the service is rendered. In general, every form of compensation income is taxable, regardless of how it is earned, by whom it is paid, the label by which it is designated, the basis upon which it is determined, or the form in which it is received. Exemption: the compensation income including overtime pay, holiday pay, night shift differential pay, and hazard pay earned by minimum wage earners or MWE who has no other returnable income are non-taxable and not subject to withholding tax on wages. When does an employer-employee relationship exist? Generally, an employer-employee relationship exists when the person for whom services are rendered has the right to control and direct the individuals who performs the services, not only as to the result in accomplishing the work but also as to the details and means by which that result is accomplished. Remuneration for services constitutes compensation even if the relationship of employer and employee does not exist any longer at the time when payment is made between the person in whose employ the services had been performed and the individual who performed them. Note that compensation income subject to tax is based on gross income less applicable exemptions. No business and personal expenses are allowed as deductions from gross compensation income, and the rule on compensation income applies only to resident citizens, resident aliens, non-resident citizens, and non-resident aliens engaged in business in the Philippines. It does not apply to non-resident aliens not engaged in business. Neither does it apply to corporations, states, and trusts because compensation presupposes personal services. The gross compensation income may be classified as follows. First, the basic salary or wage. Salary refers to earnings received periodically for a regular work other than manual labor, such as the monthly salary of an employee. Wages, on the other hand, are earnings received usually according to specified intervals of works, as by the hour, day, or week. An example is a carpenter's daily wage. Back wages are subject to income tax and the withholding tax on wages. Second is the honoraria, are payments given in recognition for services performed for which established practice discourages charging of a fixed fee. The honorarium of a guest lecturer is an example. The third one is the fixed or variable allowances. In general, fixed or variable transportation, representation, COLA, and other allowances that are received by a public officer or employee of a private entity in addition to the regular compensation fixed for his position or office are compensation subject to withholding tax. Any amount paid specifically either as advances or reimbursements for traveling, representation, and other bona fide, ordinary, and necessary expenses incurred or reasonably expected to be incurred by the employee in the perform. His duties are not compensation subject to withholding tax if the following conditions are satisfied. It is for ordinary and necessary traveling and representation or entertainment expenses paid or incurred by the employee in the pursuit of the employer's trade, business, or profession. Second, the employee is required to account or liquidate for the foregoing expenses pursuant to substitution requirements of Section 34 of the Tax Code. Number 4, commission. It is usually a percentage of total sales or uncertain quota of sales volume attained as part of incentives such as sales commission. Fifth, fees are received by an employee for the services rendered to the employer, including a director's fee of the company. Fees paid to the public officials, such as clerks of court or sheriffs, for services rendered in the performance of their official duty over and above their regular salaries. Legal fees paid by a union on behalf of its presidents constitute compensation. Marriage fees, baptismal offerings, sums paid for conducting masses for the dead, and other contributions received by a clergyman, evangelist, or religious worker for services rendered are considered compensation. Number 6, tips and gratuities. Tips and gratuities paid directly to an employee by a customer of the employer, which are not accounted for by the employee to the employer, are considered taxable income but not subject to the withholding tax. Number 7, hazard or emergency pay. This is an additional payment received due to workers' exposure to danger or harm while working. This is normally added to the basic salary together with the overtime pay and night differential pay to arrive at gross salary. Hazard, overtime, night shift differential, and holiday pay of a minimum wage earner or MWE is non-taxable as long as the MWE has no other reportable income. 8. Retirement pay. It refers to a lump sum payment received by an employee who has served a company for a considerable period of time and has decided to withdraw from work into privacy. In general, retirement pay is taxable except in the following instances. First, SSS or GSIS retirement pays. Second, retirement pay due to old age provided that the following requisites are met. First, the retirement program is approved by the BIR Commissioner. Second, it must be a reasonable benefit plan. Its implementation must be fair and equitable for the benefit of all employees. Third, the retiree should have been employed for 10 years in the said company. Fourth, the retiree should have been 50 years old at the time of retirement. And lastly, it should have been availed of for the first time. Number 9, separation pay. Separation pay is taxable if voluntarily availed of. It shall not be taxable if involuntary. Examples of involuntary separation are death, sickness, disability, reorganization, merger of company, and company at the brink of bankruptcy. When a company is at the brink of bankruptcy, the sequence of satisfying the company's indebtedness should be in this order. First, the BIR, second, the employee, and third is the creditors. As a rule, any amount received by an official or employee or by his heirs from the employer due to death, sickness, or other physical disability or any cause beyond the control of the said official or employee are exempted from tax. Number 10 is pension. This is a stated allowance paid regularly to a person on his retirement or to his dependents on his death in consideration of past services, meritorious work, age, loss, or injury. Pension pay is taxable unless the law states otherwise or unless the BIR approves the pension plan of a private company. Number 11, vacation and sick leave. The following rules shall be observed in determining whether money received for vacation and sick leave is taxable or not. First, if paid or availed of a salary of an employee who is on vacation or on sick leave, notwithstanding his absence from work, it constitutes taxable compensation income. Second, monetized value of unutilized vacation leave credits of 10 days or less which were paid to private employees during the year are not subject to tax and to the withholding tax. Third, monetized value of vacation and sick leave credits paid to government officials and employees are not subject to income tax and to the withholding tax. The Number 12 is the 13th month pay and other benefits. 13th month pay and other benefits are not taxable if the amount is 82,000 or less. Any amount exceeding 82,000 is taxable. The new law or the RA 1065-3 increased the 13th month pay and other benefits from 30,000 to 82,000 pesos. Number 13. Fringe benefits and de minimis. The tax code defines fringe benefits as any good, service, or other benefit furnished or granted by an employer in cash or in kind in addition to basic salaries of an individual employee. De minimis benefits are privileges of relatively small value as given by the employer to his employees. Under Revenue Regulations Number 5, 2011, as amended, they are not considered as compensation subject to income tax and consequently to withholding tax. Number 14 is overtime pay. This refers to premium payment received for working beyond regular hours of work which is included in the computation of gross salary of employee. Back pay and overtime pay constitutes compensation. Number 15 is profit sharing. It is the proportionate share in the profits of the business received by the employee in addition to his wages. Number 16, awards for special services. The amount received as an award for special services of employee or suggestions to employer resulting in the prevention of theft or robbery, awards for past services and their like are also compensations. Number 17, beneficial payments. Beneficial payments such as where an employer pays the income tax owed by an employee are additional compensation income. Lastly, other forms of compensation. Other forms received due to service rendered are compensation paid in kind. It is to be noted that compensation can be paid in kind but taxes are generally paid in money. For example, an insurance premium paid by employer for insurance coverage where the heirs of employee are the beneficiaries is the employee's income.
Share of stock received as compensation. So compensation is paid to an employee of a corporation and its stock is to be treated as if the corporation sold the stock at its market value and paid employee in cash. Hence, if compensation is received in a form of shares of stock, the fair market value of the shares of stock at the time of the service is rendered is the basis of tax. Here we have an example of a share of stock received as compensation. On March 31, 2010, Attorney Gustavo Doctolero, a corporate lawyer of JC Corporation, received 200 JC shares of stock with a fair market value of 90 pesos per share as of March 31, 2010. The share of stock was intended to pay the services rendered by attorney Dr. Lero on December 2009, at which time the fair market value was 75 pesos per share. The par value per share is 50 pesos. Here in our example, attorney Dr. Lero received compensation in the form of shares of stock, which is the 200 JC shares. So the basis of the tax here is the fair market value. However, the stock was intended to pay the services of attorney Dr. Lero on last December 2009, at which time the fair market value was 75 pesos per share. So the fair market that we will follow is 75 pesos and not the 90 pesos per share market value of March 31, 2010. So we multiply the 75 pesos fair market value to the number of shares received of attorney Dr. Lero, which is the 200 shares. So 75 pesos times 200 is equivalent to 15,000 gross compensation income of attorney Gustavo Dr. Lero. Note that upon the receipt of stock under an option granted to a taxpayer employee by his employer in an earlier year as compensation for personal services, the respondent realized taxable income in the amount of the excess of the fair market value of the stock at the time the receipt over the option price. Employee stock option. A stock option is a privilege granted to some key employees of a corporation to avail of the said corporation shares of stock in the future of a certain price. When we say key employees, these are the employees with major ownership and or decision-making role in the business. Example is the operation manager, accountant, foreperson, and many more. So the following rules shall be observed when a company issues a stock option to its employees. First, as compensation income. If the market price is greater than the option price, the difference is a compensation income at the date of grant. So, market price less or minus the option price. And the next one is as capital gain. If the stocks are sold, the excess or sobra of the market price at the date of sale over the market price at the date of grant is a capital gain. So market price at date of sale minus market at date of grant is equivalent to capital gain. Example, in 2008, Simon Pedro's stock option to purchase was granted by his employer corporation to purchase 10,000 common shares at an option price of 10 pesos when the market price was at 15. In 2000B, Pedro exercised the option, subsequently sold the common shares for 18 pesos per share in the local stock market. So here in the table, para makuha ang compensation income, atong ang market price, kuha na to sa option price. So, di ba ang market price nato is sa share is 15 pesos. So, 15 pesos times 10,000 shares is equivalent to 150,000. Ato din i-minusan sa option price. Tapos, diba, ang option price na to is 10 pesos. 10 pesos times 10,000 shares is equals to 100,000. So, 150,000 minus 100,000 is equivalent to 50,000 compensation income taxable at normal tax. So, para makuha ang capital gain, market price at date of sale minus market price at date of grant. Gibaligya man ni Pedro at 18 pesos ang per share sa iyang share. So, atong i-multiply. 18 pesos times 10,000 shares is equivalent to 180,000. Less din nato siya ditong stock options market price na 150,000. So, ang nabilin is 30,000. So, mauto iyang capital gains. Not subject to normal tax. But note that the capital gains on sale of stock shall no longer be reported in the income tax return of Pedro because it was sold in the local stock exchange, in which the sale of share of stock was subjected to a percentage tax of 0.5% based on the selling price. Next is cancellation of debt. The cancellation and forgiveness of the indebtedness may amount to a payment of income, gift, or capital transaction depending upon the circumstances. The following rules shall be observed. First, if a creditor merely desires to benefit a debtor and without any consideration cancel the debt, the amount of the cancelled debt is a gift and not an income. Next is if a corporation to which a stockholder is indebted forgives the debt, the transaction has the effect of the payment of a dividend. If, however, a debtor performs services for a creditor who in consideration thereof cancels the debt, the debtor realizes income for his services to the extent of the amount of the debt cancelled. Here we have an illustration. Miss Marie Utang, a computer encoder, borrowed 10,000 pesos payable within 2 months from Mr. Ulysses Chan, her employer. Miss Utang was not able to settle her debts on the stipulated time of payment. However, Mr. Chan cancelled her indebtedness in lieu for her 2 months' services. So, the cancelled indebtedness of 10,000 pesos shall be considered as compensation income of Miss Marie Utang. As we have this in our rule number 3, which is if a debtor performs services for a creditor who in consideration thereof cancels the debt, the debtor realizes income for his services to the extent of the amount of the debt cancelled. Insurance premium as compensation. These are premiums paid by the employer on life insurance coverage of the employee, wherein the beneficiary is the employee's family. These constitute taxable income on the basis of the amount of premium paid. Example here, Baguio Water Supply, BWS, paid the life insurance premium of Mr. Vincent August amounting to 5,000 per year. The beneficiary of the proceeds of insurance is Mrs. August. So Mr. August earned 5,000 compensation in relation to life insurance premium paid in his behalf, a deductible expense of BWS because the beneficiary is other than the employer. However, if the beneficiary of the life insurance is the employer, such payment of insurance premium shall neither be part of the employee's compensation income nor shall it become the employer's deductible expense. So, the table below shows the taxability and deductibility of insurance premium paid by the employer. If the beneficiary is the employee, is it taxable compensation of the employee? Yes. Is it deductible operating expense of the employer? It is still a yes. On the other hand, if the beneficiary is the employer, it is not taxable compensation of the employee and it is not deductible operating expense of the employee. Next is income tax paid as compensation. For income tax, it is paid by the employer in favor of the employee. The basis of the tax is the amount of tax paid. In this case, the employer will pay for the employee. For the basis of tax is up to the tax paid. Here is an example. Magnolia Corporation pays the income tax of Miss Leung for being the Vice President for Operations. Assuming that the amount of Miss Leung's salary is 300,000 and income tax paid is 50,000, so the gross income of Miss Leung is 350,000, which is giplas ang salary nga 300,000 o ang 50,000 nga tong sa tax paid. Next is convenience of the employer's rule. This tax rule provides that the allowances in kind is furnished to the employee for and as necessary incident to the performance of his duties are not taxable. Examples are food and lodging, benefit by a household maid, driver, and etc. In living quarters and meals, the following rules govern the living quarters and meals. First, when living quarters are furnished in addition to cash salary, the rental value of such quarters should be reported as income. However, if living quarters or meals are furnished as to an employee for the convenience of the employer, the value thereof need not be included as part of compensation income. Unless provided for the exclusive benefit of the employer, the rental value of living quarters is compensation income to the employee to the extent of his reasonable needs, and the excess shall be considered as expenses of the corporation. The exclusion for meals is allowed only when they are furnished within the employer's business premises. The exclusion for lodging is allowed only when it is furnished within the business premises of the employer, and the employee accepts lodging as a condition of his employment in order to perform his duties properly. Unless the above conditions are met, the value of any board and lodging furnished by an employer is ordinarily taxable to the employee. Remuneration for casual labor. The following rules shall be observed regarding remuneration for casual labor. First, remuneration for casual labor is not the course of an employer's trade or business is not considered as compensation. The term casual labor includes labor which is occasional, incidental, or irregular. The expression not in the course of the employer's trade or business, it includes labor that does not promote or advance the trade or business of the employer. Next, any remuneration paid for casual labor, that is labor which is occasional, accidental, or irregular, but which is rendered in the course of employer's trade or business, is considered compensation. And any remuneration paid for casual labor performed for a corporation is considered as compensation. So example here is Miss Adeline owns the Choco Company, a chocolate manufacturing business in Cebu City. She employs the following persons during a taxable year for a short period of time and pays their related remuneration. So worker A is a repair service home of Adeline. Yung status is 5-day restriction of work. Tapos yung amount is 1,500. Worker B is a repair service for Choco Company. And then na siya 10-day of work. Tapos yung amount is 4,000. Si Worker C is an accounting clerk. Tapos yung status is casual for 3 months. Yung amount is 18,000. And Worker D is a store helper. Siya pod is casual for 2 months. Tapos yung amount is 9,600. But the question is, how much is the total remuneration considered as compensation from the casual service rendered? So, ang atong i-add is si worker B, C, and D. So, atong i-add ilang mga amount which is the 4,000, 18,000, and 9,600. Tapos yung total is 31,600. Note that the payment for the repair service in the home of Adeline is not considered compensation because it is not business-related but a household-related service.
Let's proceed to gross income from business and profession. So first, let's define business. So business means any commercial activity engaged in as a means of livelihood or profit of an individual or group of individuals. So for example of business are the trading, merchandising, manufacturing, and other similar activities. So later on, we will discuss each of these. So profession, for tax purposes, profession is primarily any endeavor or work requiring specialized training in the field of learning, art, or science, engaged in as a means of livelihood or profit of an individual or group of individuals. So, in general, a practice or profession is a service business. So, examples are the certified public accountants, lawyers, medical doctors, and the like. Classification of gross income from business. So the gross income from business is classified into several groups, namely manufacturing, merchandising or trading, servicing, farming, and long-term contract. So first is manufacturing. Designing products, aggregating components, and assembling finished goods. Taking raw materials and using equipment and stuff to convert them into finished goods. For example, are the vehicle assembly, construction, engineering, and the food and drink. Second is merchandising or trading, buying and selling products, buying a range of raw materials and manufactured goods and consolidating them, making them available for sale in locations near to their customers or online for delivery. For examples are the wholesaler and the retailer. Third is the servicing, selling people's time, hiring skilled staff, and selling their time. For example, are the accounting, the legal, and the software development. Fourth is the farming. Farming is growing crops and keeping animals for food and raw materials. And the last is the long-term contract, a contract to perform work for another over an extended period of time. For examples of long-term contract is a contract for the construction, installation, building, or manufacturing of property that begins in 1 year and is completed in a later tax year. The term gross income shall mean gross sales less sales returns, discounts and allowances, and cost of goods sold, plus any income from investment and other incidental or outside operations or sources. In the case of taxpayers engaged in the sale of service, gross income is based on gross receipts less returns, allowances, discounts, and cost of service. In determining gross income, subtractions should not be made for depreciation, depletion, selling expenses or losses, or for items not ordinarily used in computing the cost of goods sold. So we have here the illustration on how to get the gross income. So Cabrera's store has just gone through its initial operation and provided the following data to determine the gross income for the current year. So we have here sales 240,000, merchandise inventory and 20,000, sales returns and allowances 10,000, purchases 150,000, sales discounts 30,000, gains from sale of scrap materials 5,000. The determination of gross income of Cabrero's store entails the following computation. Sales 240,000, gisubtract ang sales discount nga 30,000, then ang sales returns allowances nga 10,000. So we have net sales 200,000. I-less din siya sa cost of goods sold. Pagkuha sa cost of goods sold is ang purchases nga 150,000, i-minus siya sa merchandise inventory end means ang goods nga wala pa nahalin is 20,000. So we have 130,000 or 130,000. So 200,000 minus 100,000, 70,000, which is the gross profit from sales. Then add the gains from sale of scrap materials. So this is the other income in Cabrera store, 5,000. So the total of 75,000, which is gross income. Notes that in case of manufacturing, merchandising, or mining business, gross income means the net total sales, less the cost of goods sold, plus any income from investments and from incidental or outside operation or sources. Let's proceed to the cost of sales. So, sa cost of sales, ang cost of goods sold shall include all business expenses directly incurred to produce the merchandise to bring them to their present location and used. So the cost of sales is deducted from the present sales to calculate gross income from business. So the cost of sales of a business may be classified as follows. So, number one is the cost of goods manufactured and sold of manufacturing concern. Number two, cost of goods sold of trading or merchandising concern. And the number three is the cost of service of servicing concern. So first, let's discuss the cost of goods manufactured and sold. So for the manufacturing business, all cost of finished goods that are sold are called cost of goods manufactured and sold, such as raw materials used, materials or substances used in the primary production or manufacturing of goods. So a raw materials is the basic components of a finished product. Direct labor and manufacturing overhead. So the direct labor is the salaries and wages paid to workers that can be directly attributed to specific products. And we have manufacturing overhead, so a indirect cost incurred during the production process. For example, is the depreciation on equipment. And the freight in, the transportation costs associated with the delivery of goods from a supplier to the receiving entity. Also, we have insurance premium and other costs incurred to bring the raw materials to the factory or warehouse. Example, we have the illustration. Assume the following data of Golden Fry Manufacturing. So we have sales 6,100,000, sales returns and allowances 100,000, the raw materials beginning 200,000, the raw material purchases 3,600,000, the raw materials ending 300,000, the purchase discounts 40,000, raw materials insurance 50,000, freight in 80,000, direct labor 500,000, and we have manufacturing overhead 210,000. So to compute the gross income, first let's determine the net sales. So to get the net sales, we have sales 6,100,000 less sales returns and allowances 100,000. So 6,100,000 minus 100,000, total of 6 million, which is the net sales. The net sales minus cost of goods manufactured and sold. To determine the cost of goods manufactured and sold, first let's get the raw materials used. We have raw materials beginning 200,000. So ang kaning raw materials beginning, mauni siya ang mga materials nga wala nagamit in the previous operation. So sa previous operation, mauni siya ang raw materials ending. So add the raw material purchases 3,600,000 and the raw materials insurance 50,000 plus freight in 80,000, the total of 3,930,000. Less dayon siya sa purchase discount 40,000, raw materials ending 300,000, the total of 3,590,000 of raw materials used. By the way, the raw materials ending, mauni siya ang mga materyales nga nabilin in the current operation. So, the raw materials used, 3,590,000, add the direct labor, 500,000, and the manufacturing overhead, 210,000. The total of cost of goods manufactured and sold, 4,300,000. So the net sales minus cost of goods manufactured and sold, 6 million minus 4,300,000. We have gross income, total of 1,700,000. Second, let's discuss the cost of goods sold of trading or merchandising concern. The cost of goods sold of trading or merchandising business refers to the invoice cost of the goods sold plus import duties and freight in transporting the goods to the place where they are actually sold, including insurance while the goods are in transit. The invoice cost is the cost of the materials used to manufacture the item, labor expenses, and a margin of profit for the wholesaler. And the import duties is the tax collected on imports and some export by a country's custom authorities. So the import duty, also known as a customs duty, tariff, import tax, or import tariff. Freight in is the transportation cost of the goods to be delivered. For example, we have the illustration of Diamond Grocery. So, assume the following data of Diamond Grocery. So, we have sales, 6,100,000. The sales returns allowances, 60,000. The sales discounts, 40,000. The inventory beginning, 110,000. The purchases, 3,600,000. The purchase returns, 100,000, purchase discounts 50,000, freight in 80,000, inventory ending 300,000, and insurance for goods in transit 60,000. To get the cost of goods sold, first we have inventory beginning 110,000. So the inventory beginning, mauni siya ang mga inventory nga wala na sold in the previous operation. So, in the previous operation, mauni siya ang inventory ending. Second, we have purchases, 3,600,000. I-add dayon ang freight in nga 80,000 plus the insurance for goods in transit nga 60,000 with a total of 3,740,000. Then, i-less din siya sa purchase returns nga 100,000. Then, sa purchase discount nga 50,000. Ug sa inventory ending nga 300,000. Ang inventory ending, mauni siya ang inventory nga wala na sold in the current operation. So, the total of 3,290,000. Ayan na din siya i-plus sa inventory ending nga 110,000 to get the cost of goods sold, total of 3,400,000. Deduct to the net sales 6 million. So we have the total of 2,600,000, which is the gross income in trading or merchandising business. Third, we have cost of services. So the cost of services are the direct costs and expenses necessarily incurred to provide the services required by the customers and clients, including salaries. So, the salaries is mauni siya ang sweldo nga ginabayaran sa entity sa ilang mga employee nga ga-rendered og service sa mga customers. So, the benefits of personnel, consultants, and specialists directly rendering the service. So, mauni siya ang gabayaran sa employer sa iyang mga employee. For example, ana is ang mga PhilHealth, Pag-ibig, or ang SSS. And cost of facilities directly utilized in providing the service, such as depreciation or rental of equipment used, and cost of supplies. So for example, in beauty salon, the equipment there is the salon chairs, the blow dryer, and the curling iron, and the supplies is the shampoos and conditioners. However, in the case of banks, cost of services shall include interest expense. So sa mga bangko, ang interest expense is i-include siya sa cost of services. So we have here the example of cost of services. So the illustration, assume the following data of Reiki Reyes Beauty Parlors. So we have service revenue 940,000, service discounts 40,000, salaries of beauticians 300,000, depreciation of beauty equipment 50,000, consultants fee 100,000, beauty supplies use 150,000, salary of accountant 120,000, and the interest expense 30,000. To compute the gross income in service, we have service revenue 940,000 less service discounts 40,000 equals 940,000. So which is the net revenue? So the revenue refers to the income in rendering service. So the net revenue less cost of service. To get the cost of service, we have salaries of beauticians, which is 300,000, plus the beauty supplies used 150,000, plus the consultant's fee 100,000, plus the depreciation of beauty equipment 50,000. A total of 600,000. Deduct siya sa 900,000 nga net revenue. So the total of 300,000 nga gross income. So the salary of accountant is not a direct cost of a beauty parlor nga business. So dili siya maapil sa cost of service sa beauty parlor. Likewise, sa interest expense, dili pud siya maapil sa cost of service kay dili man bangko ang example nga business. Let's proceed to the telegraph and cable services. So the gross income of telegraph and cable services of a foreign corporation shall include income from services within the Philippines only. So in my own understanding, telegraph and cable services, for example, is the telegraph is kanang mga telephones, wired telephones. Then the cable services is like the Parasat and Signal. So they gain income from the subscribers. For example, is ako, gamit kog telephone to call in my family in overseas. So nagig ko'y bayaran ana nga payment. Then the cable services, naagid tayo ka ng bayaran ana to subscribe in our cable services. So the telegraph and cable services will include in our gross income in the Philippines, originating in the Philippines only. So specifically, the income may be derived from the following. Number 1, gross revenue derived from messages originating in the Philippines. And the number 2, amount received by the company collected abroad on collect messages originating in the Philippines and deducted from such amount paid or accrued for transmission of messages beyond the company's own circuit. So the amount received by the company in the Philippines with respect to collect messages originating outside the Philippines shall not be included in the taxable gross income. So, for example, in the illustration, Excel Communications, a resident foreign corporation, engaged in telegraph and cable services. Its revenues during the year were as follows. We have here the telegraph service having a revenue of 5 million. So within the Philippines, 60%, without is 40%. So the 60% is the taxable income in the Philippines of 5 million in telegraph service. And we have also the cable service having a revenue of 10 million. So within the Philippines, 90%, and without is 10%. So the 90% is the part of 10 million revenues that is taxable gross income in the Philippines on cable service. So the total revenue is 15 million. And to compute the total income subject to tax in the Philippines would be computed as follows. So the telegraph within 5 million, then part niya is 60%, so 5 million times 60%, total of 3 million. And the cable service, we have 10 million times the 90% is we have 9 million. So the total income subject to Philippine income tax is 12,000. Only revenues earned within are subject to Philippine income tax. Let's proceed to rental income. Rental income refers to earnings derived from leasing real estates as well as personal property. So, when you are a landlord, so then nagpaupa ka og kanang apartment, so ang imong makuha ana nga income is matawag nga rental income. Aside from the regular amount of payment for using the property, rental income also includes all other obligations assumed to be paid by the lease to the third party in behalf of the lessor. So examples are the interest, taxes, loans, insurance premiums, and the others. The rental income is generally determined by the gross receipts for the year, earned and unearned, because the nature of business involved is service. So Mr. Escobar will proceed to discuss the examples of rental income and how to compute the gross income of rental income.
Prepaid rental. Rent that has been paid in advance of the rental period to which it belongs is known as prepaid rent. Rent is frequently paid in advance, with the first day of the month being covered by the rent payment. As a result, a renter should record the amount of rent paid that has not yet been utilized on its balance sheet. Example of prepaid expenses is rent, interest expense, estimated taxes, and some utility bills. How does prepaid rent works? A prepaid expense is a balance sheet assets that emerge from a company making advance payment for goods or service that will be delivered in the future. Prepaid expenses are represented as assets that first, but their value is expensed into the income statement over time. Security deposit with restriction. A security deposit is money paid to a landlord, lender, or seller of a house or apartment as proof of intent to live there and care for it. Depending on the terms of the purchase, security deposits can be refundable or non-refundable. A security deposit serves as a form of insurance for the recipient and also be used to cover damaged or missing items. Security deposits with an acceleration clause. An acceleration provision gives the lender to the right to demand payment before the loans, usually terms expire. On time payment are usually required for acceleration clauses. The loan's terms include an acceleration clause, which specify that if one payment is missed, The borrower must repay the remaining debt. What is leasehold improvement? The term leasehold improvement refers to any changes made to customize a rental property to satisfy a particular needs of a specific tenant. These changes and alternation may include painting, installing partition, changing and flooring, or putting in customized light fixtures. Improvements may be undertaken by the landlord or the tenant and may be paid by the tenant. Types of leasehold improvements. First, tenant improvement allowance. Second, rent discounts. The third one is building standard allowance, and last one is turnkey projects. Termination of the contract of lease, where there is an immovable improvement made by the lease on the leased property, and the termination of the contract of lease is made before the expiration of the lease term. The following term rules should be regulate the circumstances. Termination explain that both parties want to terminate the lease. This section also acknowledges that if there are any ongoing obligation, for example, a duty to protect the another party confidential information, those will survive the termination.
Gains from dealings in property. This refers to the income derived from the sale and or exchange of assets which results in gain because of the excess of the amount or value received by the taxpayer over the determined value of the property he has disposed of. The general rule is that the entire amount of the gain or loss arising therefrom is a taxable gain or deductible loss. Passive income. Under Section 24B of the Tax Code, a final tax is imposed upon gross passive income of citizen and resident aliens. An income is considered passive if the taxpayer merely waits for it to be realized. Examples of passive incomes are: first, yield from deposit substitutes and trust fund; second, interest income; third, royalty income; fourth, dividend income; and last is the prizes and winnings. Yield from deposit substitutes and trust fund. A deposit substitute is a debt instrument issued by the bank to borrow money from the public other than from the client's deposits. A trust fund is any estate, especially stock, securities, or money which is held in trust by a person in behalf of another person. Both deposit, substitute, and trust fund yield earnings that are to be treated as interest income.
Interest income. Interest income is an earnings derived from depositing or lending of money, goods, or credits. Unless exempted by law, interest income received by the taxpayer, whether or not serious, is subject to income tax. For individuals, except non-resident aliens not engaged in trade or business in the Philippines, interest incomes from long-term deposit or investments such as savings, common or individual trust funds, deposit substitutes, investments management accounts, and other investments shall be exempt from income tax provided that the following conditions must be met. First, the deposit or investment must be evidenced by certificates conforming to the Bangko Sentral ng Pilipinas or BSP prescribed form, and the same must have a maturity period of not less than 5 years and in denominations of 10,000 pesos or other denominations as may be approved by BSP issued by banks, not by non-bank financial intermediaries or finance companies. However, should the holder of the certificate pre-terminate the deposit or investment before the 5th year, a tax shall be imposed on the entire income and shall be deducted and withheld by the depository bank from the proceeds of the long-term deposit or investment certificate based on the remaining maturity thereof, as follows: final tax of 5% 4 years to less than 5 years. Final tax of 12% is 3 years to less than 4 years. Final tax of 20% is less than 3 years. Here's an illustration. Mr. Wise invested 1 million pesos in a 12% long-term deposit certificate or the BSP prescribed form with 5-year maturity. Is the interest income from investment subject to income tax? Well, the answer, it depends. The interest income from such investment is subject to income tax. If terminated before the 5-year maturity, however, the interest income therefore from shall be exempted from tax if withdrawn upon maturity. Classification of interest income. Interest income may be classified into 3 categories, namely, first, exempt from income tax, subject to final withholding tax, and subject to normal tax. Tax-exempt interest income. Interest earned is exempted from income tax if received from: first, by members from a duly registered cooperative. Second, BSP prescribed form of investments maturing more than 5 years. Third, expanded foreign currency deposit system by non-resident citizens or aliens. And fourth, a tenant who paid to a landowner on the price of land under a tenant-purchaser agreement as part of CARP.
Interest income subject to final tax withholding. Interest income on deposits made in banking institution is a passive income which is usually subjected to withholding tax of 20%. Here is our example. On April 30, 2000X, Mr. Gabino Garoy placed his retirement pay amounting to 1 million in the PNB as time deposit. The interest per annum is 18%. So the gross interest income is 1 million times 18% times 8 divided by 12. So, nakuha ang 8 divided by 12 sa months. From April 30 to December 8 is 8 months. I-divide na yun sa 12 months. So, 1 million times 18% times 8 divided by 12 is equivalent to 120,000 na gross interest income. I-less dayon og 20% na 24,000. So, ang iyang interest income net of final withholding tax is 96,000. So note that a passive income has been subjected to final tax. It should not be included anymore in the computation of gross income subject to normal tax. The depository bank that withholds the tax is responsible to remit such tax withheld to the Bureau of Internal Revenue or BIR. Next is interest income subject to normal tax. Here, lending is the main course of business. These are earnings derived from lending money, goods, or credits from one person to another without any withholding tax made. Since these interest earnings are received in its total amount, they should be subject to normal tax of the taxpayer. And since the interest income is earned in the normal conduct of business, they shall be included as part of income to be reported in the annual income tax return. In our illustration, Baguio Lending Corporation lends 1 million during the year. The average interest per year is 18%. The interest income of Baguio Lending Corporation would be 180,000. It derived from the 18% of 1 million. So 1 million times 0.18 is equivalent to 180,000. Assuming that the operational expenses of Baguio Lending were 80,000 pesos, its income tax would be 30,000, computed as follows. So interest income is 180,000 less the 80,000 pesos of operating expenses is equivalent to the net taxable business income amounting to 100,000. Then 100,000 multiplied by the corporate normal tax, which is the 30%, and then the income tax is 30,000 pesos. But take note that the normal tax of a corporation is 30% based on taxable income according to the Republic Act number 9337, or also known as the Value Added Tax Reform Law, while the normal tax of an individual taxpayer is tabular, graduated tax rates in nature starting from 5% to 32%. So here is a summary classification interest income. So interest income na siya eh. So ang interest earnings received from cooperatives, BSP prescribed form investments more than 5 years, expanded foreign currency deposit system earned by non-residents, and a tenant who paid interest to a landowner on the price of a land under a tenant purchaser agreement corp is subject to tax exempt. If the interest earned from the financial companies na 20% FWT, non-BSP prescribed form investments, 5% or 12% or 20% FWT, expanded foreign currency deposit system earned by resident, 7.5 FWT, is subject to final withholding tax. But if the interest earned from the principal business activity, incidental interest earnings not subjected to final withholding tax is subject to normal tax.
Royalty income is a payment or portion of proceeds paid to the owner of a right, such as an oil right or a patent for the use of it, or a portion of the proceeds from the work of an author or composer. Royalty income may be classified as follows. In general, royalty income includes those which are derived from natural resources or products such as coal, gas, oil, copper, silver, gold, and other similar products. These kinds of royalty income are subject to 20% final tax, and royalties on books, literary works, and musical composition are royalty income subject to 10% final tax. So for the illustration, Mr. Good Godin received the following royalties during 2007. On sale of goods hamburger or franchise, 200,000. On sale of books authored by Godin copyright, 300,000. So in order to get the 500,000, i-add lang ang duha, 200,000 plus 300,000, the total will be 500,000. The total tax due on royalties would be royalty tax sale of goods hamburger, 200,000, which is katong given, and then times 20% equals 40,000, and then sale of books authored by Godin, 300,000 given gapon, and then times 10%, kay ang nakabutang dito sa gidiscuss ganiha is ang sales of books or royalties on books is subject to 10% tax, maong 10% siya, so that is 30,000. 40,000 and 30,000, total royalty tax due would be 70,000. Dividend income. Dividend income is a form of earnings derived from distribution made by a corporation out of its earnings or profits and payable to its stockholders, whether in money or in other property. Such earnings may be exempt from income tax or subject to either final tax or on the normal year-end tax of individuals or corporations. Tax rules on dividend income. The following rules shall govern whether dividends are subject to tax or not. If received by a domestic or resident corporation from domestic corporation subject to tax, such dividend is tax exempt. Pure stock dividends, dividends received from cooperative, and pure liquidating dividends are tax exempt. Dividend is subject to final tax if received by an individual or non-resident corporation from a domestic corporation subject to income tax. If received by a resident citizen, non-resident citizen, and resident alien, the final tax applicable will be 10%. If received by a non-resident alien not doing business within, the final tax is 25%. If received by a non-resident foreign corporation from a domestic corporation, the final tax is 20% under the rule of reciprocity. Otherwise, the final tax is 30%. Other dividends excluded from Rules 1, 2, 3 are included in the computation of the taxable income and income tax at the end of the year. In this slide, you will see the summary of taxes on dividends, which is katong gi-yaw nako ganina. Forms and valuations of dividend income. For income tax purposes, the form of dividend income shall determine its applicable treatment. Dividends that are usually received by a stockholder are as follows: cash dividend, property dividend, stock dividend, scrip dividend, indirect dividend, and liquidating dividend. For cash dividend, a cash dividend is the most common form of dividends. It is valued and taxable to the extent of amount of money received by the stockholder. So we have illustration here. Mr. Salibao received 60,000 cash dividend from Manac Corporation, a domestic corporation. So that would be the 60,000 received by Mr. Salibao is subject to a 10% final tax. 10% ang final tax niya because ang ang domestic corporation, citizen or resident alien, 10% yun ang final tax as stated sa katong rules. A property dividend is a dividend payable in property of an issuing corporation is a property dividend. The property dividend is usually valued and taxable to the extent of the fair market value of the property received at the time of declaration. Examples of property dividends are merchandise inventory, supplies, and etc. Shares of stocks of another corporation or treasury stock of issuing corporation if acquired at cost different from its par value. For illustration, we have here Mr. Gallardo invested in the common stock of Anscor Company for 1,000 shares at a cost amounting to 50,000. After a year of investment, he received from Anscor 100 shares of stock of Cebu Pacific common shares with a unit cost of 10 pesos per share. The fair market value of Cebu Pacific at the time of declaration was 8 pesos per share, and the fair market value of Anscor share at the time of distribution is 55 pesos per share. How much is the property dividend income received by Mr. Gallardo? So, the property dividend income of Mr. Gallardo would be ang fair market value of Cebu Pacific per share is 8 pesos based sa illustration. And the number of Cebu Pacific shares received is 100 shares of stock. So, the dividend income of Mr. Gallardo is 8 pesos times 100 nga share is equals to 800. And that would be all for my topic. I hope you have understand the topic very well, and thank you for listening.
Stock dividends. A stock dividend is a dividend payment to shareholders that is made in shares rather than as cash. The stock dividend has the advantage of rewarding shareholders without reducing the company's cash balance, although it can dilute earnings per share. Taxable stock dividend. When you receive a dividend, a total value basis of the stock doesn't change. Instead, the basis of each share changes. Stock dividend usually don't have tax implication until you sell the shares. So, the amount paid in cash for the fractional shares is considered taxable income. Not taxable stock dividend. If shares are held in a retirement account, stock dividends and stock splits are not taxed as they are earned. Generally, in a non-retirement brokerage account, any income is taxable in the year is received. This includes dividend, realized capital gains, and interest. Redemption of stock dividend. Stock redemption or cancellation taxable as dividend if the corporation cancels or redeems stock issued as a dividends as such manners as to make the distribution and cancellation or redemption in whole or in part essentially equivalent to the distribution of taxable dividend. The amount so distributed in redemption or cancellation stock is considered taxable income. To see instead that it represents a distribution or earnings or profit, common reasons for redemption include an obligation under a buy-sell agreement to purchase stock of any shareholders who offer it for sale, to go private by redeeming all shares traded publicity, thereby restricting owner to private investors, to gain a bargain if a corporation feels that the shares are trading below their intrinsic value, to retire preferred stock so as to eliminate the dividend payments. Stock dividend different from shares previously acquired. When stock received are of a different class from share previously acquired, the stock dividends are not income and therefore not taxable. The original cost of the investment is allocated between the original share and the stock dividend of the basis of their respective market value at the date of receipt. Scrip dividend. A scrip dividend is issued in the form of promissory note and is taxable to the extent of its fair market value. It is taxable in the year when the warrant was used. What is meant by scrip dividend? When company issues scrip dividends, it means they are giving investors the option to receive additional share instead of a cash dividend. Scrip dividends are exempt from stamp duty and dealing charges and mean the company can keep cash within the business. Indirect dividends. Indirect dividends are those other dividends representing payments or rights received by the taxpayer, which are really dividends. Indirect dividend is announced in one year but paid in another. Investors pay tax on the dividends the year it is announced, not the year the dividend is paid to them. For certain business entities, the rules on the indirect dividends are more complex. Liquidating dividend. Liquidating dividend are return of stockholders' investment. It arises from the distribution or asset by a corporation to its stockholders upon corporate dissolution. What is liquidating dividends? A liquidating dividend is a type of payment that a corporation makes to its shareholders during a partial or full liquidation. For the most part, this form for distribution is made from the company's capital base. As a return of capital, the distribution is typically not taxable for shareholders. A liquidating dividend is distinguished from regular dividends that are used from the company's operating profits or retained earnings. Prices and winnings. The Internal Revenue Code states that under certain circumstances that value of prizes and awards or gift to individuals is considered taxable income. Merchandise or products won as a prize or award will be considered at the fair market value and could also be considered taxable income.
Partners' distributive profits from professional partnerships net income. The partner's shares in the distributive profit of a professional partnership represents his gross income.
Other sources of income. These earnings are categorized as other sources of income because they are not generally incidental earnings or not common source earnings. Usually, these income are but not limited to the following is bad debt recovery, second one is tax refund or credit, third one is annuities and income from whatever source. Bad debt recovery is a payment received of a debt what was written off and considered uncollectible. The receivable may come in the form of loan, credit line, or any other accounts receivable, because it is generally a loss when it is written off. Bad debt recovery usually produce income. In accounting, the bad debt recovery credit the allowances for bad debt or bad debt reserve categories and reduces the accounts receivable category in the book. Tax refund. A tax refund is a reimbursement to the taxpayer of any excess amount paid to the federal government or a state government. A payer tends to look at a refund as a bonus or a stroke of luck, but it almost often represents an interest-free loan that the taxpayer made to the government. In most cases, it is avoidable if you get tax refund. It means you overpaid your taxes last year. Self-employed people can avoid it by estimating their taxes more accurately for quarterly estimated tax payments. Regular employees can avoid them by accurating filing out Form W-4 and keeping it up to date. Income annuity. An income annuity is an annuity contract that is designed to start paying income as soon as the policy is initiated. Once funded, an income annuity is annuitized immediately, although the underlying income units may be the either fixed or variable investment. An income annuity is a financial product designed to swap a lump sum amount of guaranteed periodic cash flow. An income or immediate annuity generally starts payment 1 month after the premium is paid and may continue for as long as the buyer is alive. Such annuities are especially suitable for retirees who are concerned about outliving their retirement savings.
Income from whatever sources defined. Income from whatever sources derived means inclusion of all income not expressly exempted within the class of taxable income under the laws irrespective of the voluntary or involuntary action of the taxpayer in producing the gains and whether derived from legal or illegal sources. Examples of income from legal source are employee salary, bonus, and commissions or rebates of a medical representative. And examples of income from illegal sources are gambling, kidnapping, extortion, smuggling, and embezzlement. Illegally obtained income. As a rule, illegal income is taxable. Income obtained through illegal means is included in the wrongdoer's gross income even though he is obligated to return it when discovered. The mere fact that the transaction is illegal does not exempt it from income tax laws. Gains from such transactions as gambling, extortion, swindling, and the like are all taxable. Income that is not realized is not taxable even though its absence is due to an illegal act. Moral turpitude is not a touchstone of taxability. The courts have sustained the BIR's determination of the illegal gains from such records as bank deposits or on the basis of commissions paid out, and even from a formula determination based on the nationwide experience. The burden is on the taxpayer to offer independent evidence to contradict such determination. Embezzled funds. Embezzled funds are income without consent or expressed or implied, with an obligation to repay. If the embezzler reaps the fruit of his crime without restriction as to the position he is in receipt, the income, though it may be claimed he is not entitled to the money and may be adjudged liable to restore its equivalent. When reported as income, actual repayment of embezzled fund will give rise to deduction. Income received by error. When income is received under a mistake or fact or law, the income is included in the gross taxable income of the recipient, notwithstanding the fact that the recipients may be required to return the income item to the payer when the error is discovered. And that will be all for the report. Thank you very much.